Legendary investor Warren Buffett once said, "It is wise for investors to be fearful when others are greedy, and greedy when others are fearful." For the last year, the crypto market is falling, and the greed versus fear index of this asset class looks like this. There is a lot of fear around the crypto at the moment. So, should you follow Mr. Buffett's advice and be greedy for crypto? Let's find out. "2022 has been very rough for the crypto market. Crypto leaders, like Bitcoin and Ethereum, are down more than 50% from their all-time highs in late 2021. While it is uncertain where the crypto bottom is, some experts say crypto price could fall even further before it can be its way back to recovery. Bitcoin saw multiple new all-time highs in 2021 as big institutions started incorporating crypto in their businesses. Following with Bitcoin, every other crypto coin and token saw massive gains. When the pandemic hit, the market was flooded with money by the government, and any random dog coin was seeing their price skyrocketing. But the market has changed. The Federal Reserve started hiking the interest rates and reducing the money supply in the market to fight against high inflation. Along with it, the overall crypto market is facing many scandals and asset mismanagement from the exchanges and crypto lenders. Investor confidence is running thin on this asset class. However, people's interest in crypto remains high. It still is a hot topic among the investors, whether for good reason or bad. Let's first look at why crypto is where it is now. In the last year, a lot has happened. The economy saw 40-year high inflation, the stock market faced unpredictable volatility, and there is a war going on in Europe. All these are major events that have huge impacts on the overall economy, and crypto is not immune from it. Many have thought crypto would be a great inflation hedge. But that turned out to be not true. I have a video on why Bitcoin failed to be an inflation hedge. Check out the link in the description. Crypto mostly still is a speculative investment. It is a high-risk, high-reward asset. But, as central banks around the world start to fight against high inflation by slowing the economy, investors are escaping risk on assets like crypto. Until the economy has cooled down, the central banks indicated that they'll keep raising the interest rates. This may be good for the economy in the long run, but for the short term, crypto and other speculative assets will suffer from this. The effect of war in the global economy is also significant. The world is just coming out of a multiple-year-long pandemic, and we are still not out of the woods yet. The conflict on top of that created huge supply chain issues globally, causing high inflation. Until inflation is dropped between the desired 2 to 3%, the market will continue to see monetary policies that are designed to thwart the growth of the economy. On top of the global economic crisis, the crypto industry is facing another big problem, and this is from within. Lack of crypto regulation, and many nefarious actors in the crypto community, is causing its downturn. One major character in that regard is Sam Bankman-Fried, the founder of FTX. Recently, FTX has filed for Chapter 11 bankruptcy after they failed to secure a bailout. FTX illegally used investors' money for the proprietary trading through Alameda Research, which is their sister hedge fund. When Binance announced that they'll sell their FTX tokens, known as FTT, the investors panicked, and anxious investors tried to pull out of their crypto funds from FTX, causing the company to collapse. The contagion effect of FTX bankruptcy is also spreading across the crypto market. Along with FTX collapse, other crypto lenders and exchanges, like BlockFi, Three Arrow Capital, Voyager Digital, and Celsius Network, are also facing Chapter 11 bankruptcy. Most recently, crypto exchange Gemini suffered a $485 million bank run amid contagion fears, and crypto lender Genesis is still halting custom withdrawals. With all these crises and uncertainty in the crypto market, how does the future look like for crypto? To many, this market looks like a great buying opportunity. In traditional stock or other asset markets, any temporary aberrations in price corrects themselves over time. For example, if you look at the price chart of S&P 500 for the year 2022, you may think that the price has fallen significantly. However, if you change your perspective and look at it in a longer time frame, you can see the price is up multiple times compared to a decade ago. However, you should be cautious to use the same logic for crypto, as crypto has barely been around for a decade. Crypto market is still new and oversaturated with coins and tokens without utilities. In fact, one of the biggest criticisms of crypto is that it lacks the utility and any real-world purpose. Crypto came into existence with a lot of promises. It envisioned to replace the traditional financial system. Although the promise still stands, and slowly some organizations and governments are willing to experiment with the idea of cryptocurrencies, it is still an uphill battle for the crypto market. In fact, the recent debacles surrounding crypto indicate that this market warrants some level of regulation. Lawmakers in Washington, D.C., and across the world are trying to figure out how to establish laws and guidelines to make cryptocurrency safer for investors and less appealing to cyber criminals. So far, some regulatory progress has been made in 2022. In March, President Joe Biden issued an executive order directing government agencies to investigate the responsible development of digital assets, such as stable coins. The United States Treasury Department has published the first framework, resulting from President Biden's executive order on digital assets, outlining how the United States should engage with other countries on digital assets. In 2021, Federal Reserve Chair Jerome Powell stated that he had no intention of prohibiting cryptocurrency in the United States, while Securities and Exchange Commission Chairman Gary Gensler has frequently remarked on both his own agency's and the Commodity Futures Trading Commission's role in policing the market. So, what could new regulations mean for the current and future crypto investors? According to many experts, regulations can actually be a good thing for the investors and for the industry. More regulation could lead to greater stability in the notoriously volatile cryptocurrency market. It may also protect long-term investors, prohibit fraudulent conduct inside the crypto ecosystem, and provide clear instructions to allow enterprises to develop in the crypto economy. Sensible regulations give investors more confidence in crypto, but it might take some time before regulators get it right for this asset class. A broader adoption of crypto is absolutely critical for its recovery. Mainstream companies are starting to take interest in crypto by incorporating crypto in their payment systems. Companies like AMC, PayPal, and Square are betting on crypto by allowing users to buy on their platforms. Tesla accepts Dogecoin payment and is in a back and forth on accepting Bitcoin as a method of payment. Although it is slow, it is a step in the right direction for the crypto industry. It is still a long way off, but as more retailers accept payments in cryptocurrencies, it might change the crypto landscape in the coming future. Other crypto features, such as DeFi, can be a great example of why cryptocurrency should succeed. DeFi stands for decentralized finance, which refers to an online world of alternative financial services powered by blockchain technology. DeFi gives investors total control over their assets and helps avoid the middleman, such as in traditional financial systems like banks and lenders. Essentially, the businesses that we interact with every day to manage our finances will be replaced by software. Because of this, there is no central authority to report to in the DeFi space. However, it is still very early for DeFi compared to the traditional financial systems. Although it gives you more control and freedom over your own assets, an unregulated DeFi space can be vulnerable to exploitation. Similarly, NFTs, or non-fungible tokens, can redefine the landscape of digital ownership in the future. So, the question is, should you still be in crypto market? And should you still invest? We can speculate on the value cryptocurrencies will have for investors in the future months and years, but the reality is that it is still a new and speculative investment with little history to base forecasts on. No matter what any expert says or predicts, the truth is, no one really knows. But one thing for sure is that the crypto is here to stay. There is a lot happening on this front. It is still a relatively new space, and a lot of innovations are happening. In this process, mistakes are made, and solutions are being proposed. That's how this market will be mature and stable. Change is slow. Hundreds of years of the traditional financial system will not be replaced within a year or even a decade. Change comes with uncertainty, and people don't like uncertainties. It'll take time for the crypto to rise to its full potential. So, if you have a long-term view, crypto investment may not be a bad idea. But for now, keep your investment small and only invest the money that you're willing to lose. If you enjoyed this video, please subscribe to the channel for more content. Leave a like and comment if you're still in the crypto market and what is your long-term outlook for crypto. Thank you for watching.